inaugural first-time homebuyer webinar put on by me, Monica Soyemi, your New York City agent here. And today I really just wanted to share a lot of tips and advice and information for a lot of first-time homebuyers. I'm really excited to share who we are going to be speaking with today. His name is Muhammad Haidar, and he is a mortgage originator with the Neighborhood Housing Services of New York City. And what is so amazing about this particular company is that they actually are all about bridging the gap. They're about bridging the gap of wealth between people of color, the BIPOC community, and their counterparts. So this whole webinar is really just about informing you, educating everyone about the opportunities that you do have when it comes to buying your first home. This is the first of many. So welcome. Congratulations on being the first to be a part of this.
Awesome. Well, good evening, everybody. Welcome to our home ownership webinar. We're truly fortunate to have you all here today. You could have spent your evening doing anything you wanted, but you chose to be here, and that honestly means a lot. My name's Muhammad Haidar. I'm a mortgage professional, as Monica's mentioned, with over 7 years of experience in the industry. Throughout my career, I've dedicated myself to facilitating the path to home ownership for hundreds of individuals and families, breaking down all the complexities there are with obtaining a mortgage. So I've worked in a lot of banks. I started my career at JP Morgan, where I've learned a lot in terms of how the banking industry works, especially with mortgages. I eventually moved to mid-sized brokerages where I learned more about different products that you can, attain as a borrower. And I'm currently here, as Monica's mentioned, at Neighborhood Housing Services of New York City, which is a community development financial institution, or CDFI for short. So without further ado, I just wanted to give you guys a brief introduction about NHS NYC. So founded with a mission to empower financial progress and stability, Neighborhood Housing Services of New York City, or NHS for short, is a dedicated community financial institution. And we are aiming to serve low to moderate income communities. Our primary focus is to close the socioeconomic gaps in society by facilitating access to affordable financial services and resources, which typically a lot of banks have. They have several limitations for a lot of people in certain communities, and we're trying to basically make it easier for that. At NHS NYC, we believe that every individual deserves the opportunity to thrive financially, regardless of their socioeconomic background. In line with these ethics, our work is primarily concentrated on creating an inclusive financial landscape that aids underserved communities and catalyzes their economic growth. I will say, like my family, for example, we used NHS NYC, or an institution similar to it, and it helped them buy their first home, which is something we couldn't have been able to have done with using our general banks. So we have several programs and products that we offer that a lot of banks, as I've mentioned, don't offer. The one thing that Monica's mentioned is we have 100% financing, which means that you typically don't need the full 20% down payment to purchase a house. We'd be, given the qualifications, we may be able to offer you complete 100% financing on that. So I did want to go over, Monica, is there any questions that you wanted me to go over before I start, before I went over the products and the programs that we have?
Yeah, so I guess the burning question for a lot of people is, okay, they hear 100% financing and they're thinking to themselves, like, what are the guidelines? What do I need to bring? What income do I need? So if, let's say, for example, I'm a buyer and I'm looking to buy, let's say, a 2-family house or even a 3-family house in the city of New York, and I want to do 100% financing, how could I go about doing that?
Well, first things first, I would say is if you were to do it with us, I'd recommend getting a pre-approval through us first. In order to get a pre-approval, you'd have to submit your documents, including your 2 years tax returns, your W-2s, your bank statements. And then once all of that is provided, we can do a pre-approval to see how much you would qualify for in terms of a mortgage. After that's taken care of, I would recommend basically looking around. We'd connect you with a realtor, or you yourself, of course. And then once you guys find an eligible property, we would go over the entirety of the mortgage process. But what we can do is we can offer you 100% of that loan amount, or whatever the purchase price may be. and all you would need is just the closing costs.
Okay, so let's say I want to purchase a property for around 600,000 or $700,000 in New York City. So you're saying that I would be able to receive a loan for the full 600,000, and I would need to just come to the table with closing costs. So how much would my closing costs be?
Of course, that depends on what your attorney's fees are, or there's several factors that play into closing costs, but most of them have to do with title fees, bank fees, etc. Typically, from my experience, I've seen closing costs coming in anywhere between, if you're getting a co-op, 10 to 15,000 versus if you're getting a multifamily home, it could be slightly more like 20 to 25,000. However, that's still, if you think about it in hindsight, it's not, there are other grants that you can apply for, such as Sony May grants, which can also help you obtain, funding for your closing costs as well.
Okay, so I think honestly that's amazing, Mohammed. So you're saying that I can get a Sony May grant plus 100% financing?
That is correct.
Okay. So for those of you who don't know, the Sony May is SONYMA, and it stands for the State of New York Mortgage Association. Is that right?
Correct.
And so this is a first-time home buyer grant that the state of New York offers. If you are looking to purchase your first home, you can actually get up to 3% towards your down payment and your closing costs. So if you are able to put together, first your 100% financing with NHS plus a 3% grant from the state of New York, you could be able to purchase a home for little to no money out of pocket. So I think that's really, really amazing. So would you share with us some of the loan products you offer? I know you have one that's like a down payment assistance one. You also offer more generous DTI options for buyers. Is that right?
That is correct. Let me see if I can pull up our product chart here for you guys. Awesome. Well, can you guys see my screen?
Mm-hmm.
Great, great. Let me just put this aside. Alrighty, so we do have a DPCC loan that's in conjunction to you purchasing your home, but I do want to start with our purchase product and our purchase open access product. With
Okay.
purchase open access, if you are, if you're a member of like the BIPOC community, there's several. Let me show you down here. We have a 620 FICO score minimum requirement, and it's up to 2,095,000 or 1 to 4 units. It's adjusted based on the number of units. And if you see over here, it says up to 100% LTV. That means loan to value ratio. You'll see that like a lot of other places, they ask for 95%. Like working at JP Morgan or at the other brokerages, we had a 95% cap. So anything that exceeded that, we couldn't close any loans with those borrowers. One thing good about this product as well is we have an up to a 40-year fixed rate. So you'll see that a lot of banks, the maximum that they could offer you is a 30-year mortgage. We can do it for up to 40 years, which would make your monthly payment a lot less. Aside from that, we have our standard purchase product as well. Now, this goes to members of all communities. This does not have to necessarily be a part of the BIPOC community. Everything's within all 5 boroughs of New York City, and it's the same factors that apply. It's up to 100% loan to value ratio, same unit, adjustments, and then same AMI requirements. The only difference is this one has a 721 FICO score requirement, but a lot of these exceptions can be made for us, which is a good thing about us here at NHS NYC.
Great. Great. And I had a question. So I see on column G, it says rehab. So do you offer money if people wanted to purchase a property and renovate?
That is correct. There are some restrictions or limitations, meaning that you would have to have our construction consultant go out there and inspect the property. But this purchase and rehab product is good if you're looking to get like a fixer upper and you want to work on that yourself or have like contractors do it.
Okay. And then another question is, so the 100% financing option, is that all the way up to 4 units?
Correct. It's 1 to 4 units. It wouldn't apply if you get like a commercial building or like an apartment building with like multiple, units.
Okay. So if I understand correctly, you can get a 4-family house with no down payment.
That is correct. Of course, you would need to come up with closing costs.
Okay. And which of these would be the option? Would this be a DPCC or would this be the open access?
This would be the purchase open access or the purchase product. The DPCC loan is typically what people we'll get these loans from some people who are purchasing through another lender,
Mhm.
and they just needed additional funding for their down payment and closing costs.
Understood. Now, how would someone qualify for these loans? Like, what are some key things to kind of keep in mind? Let's say someone wants to buy next month, a few months from now. What are some things they should kind of be aware of or keep in mind that you're looking for?
So a few things to keep in mind is you have to have a, let me see if it's down here. You need to have a debt to income ratio of 43% or below. I think Marita put that here. And what a debt to income ratio is basically, oh, it's right here. With purchase open access, we can make a 50% exception. However, typically you need to have a debt to income ratio of 40 to 43%. And what that is it's basically your monthly payments versus how much income you're making every month. And you factor, you basically do the average of that and you get what your debt to income ratio would be. Another thing to consider is your FICO score. You want to make sure that your score is within 620 and above. And then on top of that, you want to have at least 2 months PITI, which is your principal, interest, taxes, and insurance. So 2 months worth of whatever your monthly payment would be already in your bank account as reserves. And then along with that, you want to make sure that you have some closing costs reserved. But if you think about it in hindsight, if you were to do this with an average bank, you would need to have it at least 100 to $150,000 for a 4 unit property in terms of down payment, closing costs, etc. With NHS NYC, all you would need is just 2 months reserves and whatever your closing costs would be, which typically would be, I mean, I would imagine it to be a third of whatever a bank would ask you to bring.
Yeah, yeah, I would definitely agree. So this is really great information. So, one quick question I also wanted to ask, and of course, everyone, please share or ask away in the comments section. Any questions you might have about your whole home buying process. One question I wanted to ask you was, so I know there's also something called the Home First program. I don't know how much in line that is with what your specific department does, but could you tell us a little bit about that program?
Yeah, absolutely. Our Home First program is honestly, it's awesome. If you can find a seller that's willing to wait the time that it takes, because of course it is with it's in conjunction with HPD, the New York City Housing Preservation Department. So they take their time. But if you can find a seller that's willing to wait that time for you, you can qualify for up to $100,000 in down payment or closing cost assistance, and that is just free money that you would have been given for all of that. The downside of it is that you would have to do it with a third party lender, so it can't be with us at NHS. You would have to get your financing with one of their lenders. It's between Bank of America, Citibank, Wells Fargo. We have a wide list of lenders that we work with. And what we do is we facilitate their loan process. And once everything is approved, and mind you, this does take some time, it can take up to 6 months to a year. We provide them with funding for up to $100,000, depending on what their purchase price is.
Okay, that makes a lot of sense. Yeah. So if I can sum it up, we've got the Home First program, which will allow you up to $100,000 for your down payment and your closing costs. We also have the 100% financing for up to 4 units. A single family, 2, 3, 4 unit, or even condos and co-ops, right?
That's right.
And then you have really generous DTI offerings for buyers as well. So could you kind of break that down for some of us who may not know really what DTI is and what that means?
Of course, of course. So DTI stands for debt to income ratio. When what that is you can honestly calculate this yourself very easily. You look at what your monthly income is. Like for example, if you make $5,000 a month or $6,000 a month, and then what you do is you factor in what your monthly payments are. So for hypothetically, if you have to make and this includes car payments, credit cards, etc. Let's say you make $6,000 a month and your monthly payments come out to $3,000. That would make your DTI 50% because 50% of your income is going towards your monthly payments. At NHS, we require you to have a 43% debt to income ratio or less. However, there are certain exceptions we can make, like our purchase open access program, which offers up to 50%. Mind you, most lenders, they do ask for a strict 30 to 35% debt to income ratio. So that's a big gap that we are able to offer or be flexible towards.
Okay, awesome. Yeah, and I also wanted to share as well, a lot of people in New York, they don't really understand the value of maybe buying a multifamily home. Maybe they want to buy a condo or co-op, or depending on what your goals are, it really can change. But the power of a four family or a three family in New York City is like, let's say, hey, you're ready to move out. You want to move into you're ready to leave wherever you're at. You can live in one unit and you can rent those other three units out, and sometimes those other three units can cover your full mortgage payment.
That's
So
right.
you're able to buy a house with no down payment. You're able to get a grant for your closing costs, and then you're able to live pretty much mortgage and rent free based off of renting those other units. So it
That's
really
right.
is a super powerful tool that, we have the ability to use. Um, so I wanted
I
to kind of,
since you did bring that up.
mhm.
Um, in the case of my families, we grew up. I do want to say we grew up not too well off. We were pretty poor. My parent, my dad worked one job. My mom was, a housewife, and we qualified for one of these programs that are very similar to NHS's. And I think a lot of that is why I work here now. And with that, he qualified for, I believe, up to 100,000 or 120,000, something around there, which in 2000, 2001, that was a lot of money to put down towards, a down payment. He managed to get a three-family house with that. And that being said, he had two tenants. Those two tenants were paying his mortgage, and then he was able to save a lot more. Eventually, now we've paid his mortgage off, and we're sitting on an asset that's worth about $1.2 million. So, I mean, that's just something, anyone can do it if you just put your mind to it.
Yeah, absolutely. And so when did you bought that in 2001?
Yeah, my parents did, that
Wow.
is. So
Wow. And 20 years later, seven figures.
seven figures,
Yeah.
and that can be anybody if you think about it. You just have to have your mind right. I want to say you just have to be dedicated. This process can take some time. It's going to get frustrating. A lot of times you're going to give up and say, "Oh, forget it, maybe next year." My suggestion to everybody is to stay consistent. I know you and I are working together on that bar where, Anna,
Yeah.
and look at her. I mean, she could have given up by now with all these deals falling out, and we've managed to find something that worked out for her.
Yeah.
So
Yeah. Yeah, Muhammad is actually talking about a client of ours. He's doing the lending, and I helped represent her to buy a co-op. And it was a bit of a journey helping her find what she really wanted to find. But we're happy we got an accepted offer. We were able to negotiate. Muhammad is doing the lending, and she's able to take advantage of all of these amazing loan products. A lot of people think you got to bring 20% down to buy a home, and this is really inspiring to know that, like, majority, I mean, what percentage of loans that you're doing do people bring 20% down? I mean, are you seeing a lot of loans where people are bringing that much down, or most of your loans are definitely less?
I'm sorry, there was a little static there, Monica. Could you just
Oh, yeah, yeah. I was asking, with a lot of people think that they need to bring 20% down to purchase a home. So for you, the amount of loans that you're doing now, are you experiencing a lot of people putting larger down payments, or yeah?
at HS, I want to say 95% of our borrowers have not put down more than maybe 5 to 10%.
Wow.
Um, yeah, working at the banks, it was a different case. People were putting down 20, 30, 40%, depending on what they had. But it's
Mhm.
nice to see that you have these opportunities here at NHS or at any CDFI, really.
Gotcha. Okay. So now that we've spoken about all of the pros of NHS and all the amazing things, what would you say are some things that you'd like, buyers to be aware of? I know interest rates can be one thing that everyone is on the talk of the town. So with interest rates, where are we with rates?
Current Fed rates, last time I checked this morning, I believe we're at 6.95.
Mhm.
I do want to say, based on what I read every day, from all the articles, they are doing this right now to tackle inflation. The economy's starting to cool down a bit, so they're anticipating that the rates are going to begin to drop again sometime by the beginning of Q4, which starts somewhere in like October.
Hmm.
So once our rates go back to a reasonable 4 or 5%, maybe even, that's something I want to encourage most of you guys to start looking around before that.
Hmm.
So you can put your, you can kind of find something that you're ready to put an offer towards once those rates get down.
Okay. Okay. And so definitely starting the search now just to kind of see what options are out there. Um, Now, in terms of where we can get our down payments from, what are some ways or options that we have for not down payment, but maybe closing costs or other funding? I know people might want to know, can you use your 401k? Can you get a gift? What other ways can you get funding for these things?
Absolutely. There's several things. I mean, if you don't have the liquid funds in your bank account, meaning like the actual cash on hand, you can liquidate from your 401k or your IRA. Like you've mentioned, you can get gifts from friends or family if they're willing to offer that to you. Those are two great ways to do it. And then on top of that, we can also help search for additional grants that you may or may not qualify for, which can give, up to an additional $5,000 to $10,000 to help you guys.
Okay. And we got one question here that says, are there any restrictions to converting one level of the multifamily home into a commercial space or to be used for a restaurant? Okay. So Tiffany, a lot of that depends on zoning. That's a more of a zoning question. So if the property is sitting on land that is zoned single family, multifamily, commercial, mixed use, things like that. In specifically in the city, we have like R2, R3, R4 zoning. You would need to see the type of zoning for that particular property, and that would help you determine whether you can convert a part of the home. But what a lot of people might do is they'll actually purchase mixed use properties where one part of the home is actually commercial space. So maybe it's a restaurant or a storefront or something like that. And then the other part of the home is actually residential, which brings up a great point. Do you offer lending on mixed use as well?
We do offer lending on mixed-use properties. Personally, we have yet to receive any offers on that.
Mm-hmm.
However, that is something we can do because we've done commercial loans in the past. And
Okay,
by commercial loans, it's typically people that are purchasing full-scale buildings.
got it. Got
Mhm.
it. Okay. Thank you for that question, Tiffany. I see Blenda said, I'm looking to buy a home in the soon future. Okay, Blenda, we are definitely here to help you with that. David, I'm a beginner, haven't brought anything, want to gain knowledge and in the fields to get started. For sure. Okay. So I feel like we really covered a lot of bases today. I don't want to hold you here more than is really needed. I wanted to ask two more questions, and then we're going to open it up for Q&A, and then we can wrap it up with one final thing you want everyone to kind of know. So I guess the last two questions would be, uh, so the mission of NHS, I think you spoke about it briefly, but what is really your goal in doing this?
Our goal at NHS, and I think it's very beautiful. In America, it's a melting pot, as they say. It's a diverse place, especially here in New York City. We have all these cultures, all these people coming from all over the world. And when you first come here without any resources, any tools, any knowledge, it's hard for you to get ahead. It's hard for, as opposed to those who are here and have been here for generations.
Yeah.
So here at NHS, we try to educate people with those tools, with those resources, so we can give them the biggest asset that they can potentially have in their life, which is their home. I mean, if you think about it, that's everyone's biggest asset once they get to that point in their lives.
Yeah.
So that's what I want to say NHS's mission is.
Okay, nice. And along with that, we covered home first, we covered loan products offered. Okay, so I think that's everything on my end. We're going to open this up for about 5 minutes to take some questions, and then you can leave us with a final word, Mohammed. Thank you for taking the time.
I'm going to put my contact information here on the chat box in case anyone wants to reach out to me.
Perfect. Okay, so David asked, in respect to interest, principal, and down payment, what exactly are the terms and periods of typical mortgage payments?
In respects to interest, principal, and down payments. Well, the terms can it can range between 15 to 30, and at NHS we offer 40-year terms. And a lot of that, what your monthly payment is a combination of what your principal and mortgage balance is, what the interest is that's going to be applied, and then the taxes and insurance are typically escrowed into your mortgage payment. So
Mhm.
all of that gets factored in, and along with whatever your payment term is, between 15 to 30 to 40 years. So if you calculate it, like for example, something for $1 million and like a 5% rate, what your monthly payments would be the principal of that $1 million, the interest rate of the 5% that you're getting charged in a monthly payment, and then the taxes and insurance of your property. So I
Mhm.
hope that answered your question, David.
Was that clear, David? I think that that makes sense. Yeah, so essentially 15 to 40 years of the terms. Um, your interest and your principal, it's principal, interest, tax, and insurance that makes up your monthly payment. And of course, the more that you put down, the lower your monthly payment, the less you put down, the higher your monthly payment. So Tiffany asked, do the requirements differ for mixed use homes?
Correct. The requirements may differ for mixed use home because that would be considered a commercial slash residential or hybrid loan. So there are different factors that may get put into place because typically you'll see that with commercial loans, the interest rates are slightly higher than what the residential rates are.
Right.
Because keep in mind the home is being used for business, so there are more liabilities that are in place.
Makes sense. And I also wanted to ask, a lot of co-ops as well in the city, they usually require at least 20% down.
Mhm.
So are you saying that NHS will allow you to do no down payment even on those types of loan?
So the thing with that is if you can find a co-op that's willing to accept 100% financing, then we can help with that.
Okay.
The issue is that a lot of co-ops, like we've had this issue, you and I, in the past with our client, the board asks for 20% down prior to that, or they'll ask for the funds to be held in escrow, etc. So if you can find a building that's willing to accept 100% financing, then we can absolutely offer that.
Got it. Another question is, what are the different types of income that can qualify? If someone has social security income or maybe pension income or, what types of income can qualify for a loan?
Yeah, any income that's taxable, basically. So, like you've mentioned, Social Security income, your income from your W-2s. If you have a side business or something that you're paying taxes on that's on your Schedule C, you can also qualify for that with that. And if you have, existing rental properties, you can use your rental income as well, of course. And then
Gotcha.
there are people who play, that they, including myself, I trade a lot of, I'll do stocks or I do, cryptocurrency. So if you can show a consistency of that income being earned, that can also be applied.
Dana asked, what are the requirements for someone who is self-employed?
So Dana, we would just need your 2 years tax returns, including your Schedule Cs, and we would just do a 2 year average of your Schedule Cs to see how much, what your debt to income ratio would be, and how much you could qualify for, get pre-approved for. Of
Sounds good.
course.
And then for the multifamily, for example, so if we're getting like 2 to 4 units, um, you know, where are the what are the requirements? Like, let's say someone lives in their multifamily for a few years. Do they have to live in that home for the life of the loan, or can they, if they choose to move, like how can they?
If you choose, so with Home First, from my understanding, there are requirements where you have to occupy the residence for up to 10 years or so. Um, if you're not doing it through Home First and you just come to my side for the financing slash, lending, there are no occupancy requirements. If you choose to sell the home, you can sell it as you please. Of course, when you do sell the home, there's going to be a title report that's going to be run, and our mortgage would have to be paid off prior to that, which is standard for any financial institution.
Yeah, makes sense. So, like, let's say, for example, you have a client who's like, hey, I'm going to be in New York City for the next 3 to 4 years, and
Mhm.
I'm using NHS to purchase this property for the next few years. But hey, I want to move to Florida. Like, we've lost 1 million New Yorkers to Florida. They want to leave after 4 years. You know, how does that work if they choose to rent their home out? Is there an occupancy requirement for having this loan after 43, certain amount
No
of
occupancy requirement. You can choose to rent out the property, as you please.
time? Okay.
One thing I will say is I do get this question asked a lot. People will say, hey, what if I buy like a 3-4 unit property? And we factor the rental income for those properties, towards my debt to income ratio. Does it work like that? Unfortunately, we can't factor projected rental income on a property that you haven't purchased yet. Because a lot of people think, oh, well, they can qualify the income that I'm going to make from the future rent that I'm going to receive. But, we don't accept that or make that exception at least.
Yeah. Yeah, that makes sense.
Mhm.
Um, which is really good information to know. So, I mean, if you were to get that, like, 3 or 4 unit, let's say it's one apartment or one bedroom in each, New York can charge 2,500 for a one bedroom,
I pay much in Queens, so
2,500 for one bedroom.
for one bed.
Rent is not getting any lower in New York City. I think we can all attest to that. And with rents kind of increasing every year and landlords not kind of doing what they're supposed to do, I mean, what better time than now to be able to live for free, to be able to own your own home and really build that equity? Because,
Why
there's
would you pay your landlord's mortgage when you could just pay your own?
when you can pay your own mortgage. I think I'm gonna put that on my shirt. Um, But yeah, so to wrap it up, thank you all for coming today. Thank you, Muhammad, for being here.
Thank you,
If
Monica.
we have no more questions, I think we are good to go to wrap this up for our inaugural first time homebuyer webinar. Thank you again for being here. So I wanted to just drop some info in the chat. If you are looking to buy or sell or rent in New York City, reach out to me today. If you know someone who knows someone who knows someone who's looking to buy, sell, or rent in New York City or in the greater New York area, reach out to me today. I will leave my contact information here in the chat. I'm actually leaving my Google Voice number and my email. So that is everything. And just you can close us out with one last thing, Muhammad, and we will wrap this up.
Yeah, absolutely. It's like I said earlier, guys, don't pay your landlord's mortgage when you can pay yourselves. I hope you all learned from this. You guys, Monica is an amazing realtor to work with. I would highly recommend being a mortgage professional for this many years. I've never seen or worked with someone as hands-on as Monica is, and I've only known her for, a short span of time now. But you guys are in great hands, so rest assured, and I wish you all the best of luck, and I'm looking forward to the next webinar.
All right. Thanks, guys. Have a good night.
Have a great evening, everybody.